Good afternoon, everybody. Uneducated Economist here. So in this video, we are going to be talking about how how do I say it? I don't want to confuse the issue when it comes to what is going to take place when it comes to tariffs and what that means for building supplies going into the future, because there is so much propagandized information out there right now trying to lead people into believing that the cost of building is going to explode due to these tariffs. And it is completely asinine thoughts that are taking place. A lot of times it is assumptions, it is accusations, and it is just sheer misunderstandings of what has taken place that is now creating a situation within the industry that is going to be a self-fulfilling prophecy of higher prices. And now I can already see it. For example, right? Because a lot of you know that I work at a lumber yard. I do retail sales for a living. I have been paying attention very closely to the lumber industry for many years, and I became very popular here on YouTube by calling out the lumber industry better than just about anybody else did. And something that I'm seeing taking place right now is going to be a self-fulfilling prophecy of higher building material costs. And it's not because of tariffs, and it's not because of anything really taking place outside in the economy, but taking place literally within the people's perception. Now, yesterday I'm at the counter. I'm not involved in the sale, but I'm listening to a salesman talk to a customer. And the customer asked the salesman, when do you expect the higher prices for lumber to hit? Is it going to happen soon? Have you noticed any increases already? And now I'm looking at the guy and I'm waiting to hear why it is that he believes that there should be higher lumber prices. And all he had to say was something about the tariffs. And now he didn't use any other logic, right? Didn't come up with any other expectations or scenarios, just simply the tariffs alone. Like, his belief and his understanding of tariffs is going to create a situation in which that the lumber prices are going to go up, or building materials in general. And so I asked him, I kind of interrupted. I said, are you increasing the number that you are bidding your material, bidding out? I mean, are you adding like the expectation of higher prices to your bid? So now that bid is going out at a higher price. And now he said, no, he said he'll put like, a clause in the contract essentially that says if building material goes up, then the price would have to be adjusted. But I'm thinking, even in the idea of knowing or believing that there is going to be higher prices going into the future, the subconscious within his belief of the system, of what is happening within the system, is going to force him to put higher prices on those bids. Regardless of what happens, just that expectation, that belief. This is how the self-fulfilling prophecy takes place, right? It is forcing this outcome. Now, this is what I found interesting. I left a bunch of links down in the description, right? Now, one of them is to a news article that's talking exactly this, how the building materials supply or building materials is going to go up, and it's going to add all this cost to building homes, and the new construction costs are going to explode, or something of that nature. In fact, I titled the video something along that lines. But here's the situation. This is what the article was saying. It was like 70% of the lumber that we import into the United States comes from Canada. And then they said something about like 71% of the gypsum that we import comes from Mexico, and how the tariffs is going to impact Canada and Mexico and cause the prices of these two things to just absolutely explode. Okay, very reasonable in the logic thinking, just saying it out loud. Here's the problem with that. Now, I got this from the Coalition of Lumber Supply, lumber industry or something. Anyway, links are down in the description. This is what it has to say. Increased U.S. capacity through the enforcement of the U.S. trade laws means that today the United States can supply the vast majority of its own lumber. Well, of its own lumber needs. U.S. mills have added 6.7 billion board feet of capacity since 2016 in the form of new mills and the expansion of existing mills. The industry has produced 30 billion additional board feet of softwood lumber during this period. These increases have more than offset any decline in unfairly traded Canadian lumber imports and are enough lumber to build 2 million single-family homes. Now, this is something that I have been trying to share with the audience and have yet to find any evidence of it out there within the mainstream media or news articles or any kind of links that I could share with you until I found this one. This link is down in the description of the video. You can go and find it for yourself. The point of this being is that the United States can supply the vast majority of its own lumber needs. The British Columbia area was a huge, and still is, producer of lumber. But the problem that was taking place up there over the last decade has now moved a lot of the production from the British Columbia area down to the southern part of the United States. And now I have shared this information many times with people. Even though it is produced here in the United States, a lot of that operation is Canadian owned. These are Canadian producers working within the United States. And again, they're avoiding all the tariffs and stuff because of that. Point being, we can produce the lumber ourselves. We don't have to rely on Canadian imports. Do we? Sure. Canadian imported lumber is really cheap, and by importing this lumber into the United States, we have a plentiful supply of lumber that we can now use for our building industry. But the problem with the building industry right now is it's really slow. And because it's really slow, lots of mill curtailment has taken place. This is capacity that can ramp up here in the United States and in Canada. But the point being is that here in the United States, we can ramp up that production and meet our own needs. We don't have to rely on Canadian lumber. When it comes to the gypsum, again, this is the other two key elements that this article was trying to describe as being a increased cost to the home building industry. The other key component, gypsum, saying gypsum from Mexico. Now, again, I left a link down in the description to the usgs.gov, something like that. Anyway, talking about gypsum production here in the United States, this is what I had to say. Beginning in 2023, production capacity was 34 billion square feet. Now, this is talking about the wallboard. This is talking about like drywall, right? Gypsum drywall. There's, sheetrock is a brand name. But point being is that 34 billion square feet was produced in 2023. Sales was 27 billion square feet. We can produce far more gypsum wallboard than we consume. Again, the second key element inside of this article, using Mexico's gypsum import as an indication of what these tariffs can do to the cost of a new build, and yet the gypsum that we produce here in the United States is by far enough to cover our needs. You see how they do this? This is pure propagandized information. All of it, like everybody who was falling for this, including my customer yesterday, who is going to start increasing his bids, whether he knows it or not, subconsciously, he believes that the tariffs are going to create a situation in which that the lumber prices are going to explode. But yet here we have enough capacity or enough production capacity to fill our own needs. Nobody talks this way. I don't get it. I don't understand why until you believe in the credible threat theory, which is saying that they are forcing or pushing or wanting or desiring an elevated inflation expectation to raise the neutral interest rate so that it can meet the Fed funds rate and the Federal Reserve doesn't have to do a thing. That right there, what I just said in the last 5 seconds, probably confused more people out there than the idea that lumber tariffs are going to create a higher price on lumber. But we have to understand what it is that the Federal Reserve is wanting. What it is that the government is actually doing to help the Federal Reserve. See here, I'm going to draw a little picture here for you guys, right? Because this is what it looks like. The Fed funds rate ran up and then it dropped down. It looks something like this, right? The Fed funds rate ran up. They're trying to combat inflation, and then they brought the Fed funds rate down by 1 percentage point, right? Now, something that was taking place was something called the neutral interest rate. The neutral interest rate is the rate that is neither accommodating nor restricting the economy. It's neutral. That neutral interest rate was really low, close to zero. The only way to raise the neutral interest rate is to have an elevated inflation expectation and elevated inflation. As the inflationary scenario took off and the interest rates were moving up and the expectation was moving up, the neutral interest rate began to rise. As it met the point of which the inflation started to come down, the neutral interest rate also started to drop along with the disinflationary expectations, right? Inflation's not running nearly as hot. It's running 8%, 5%, 4%. Disinflationary pressures have now lowered the neutral interest rate. If they being the powers that be out there, if they can create an inflationary scenario or at least an elevated inflation expectation that is very well pronounced within the economy, the neutral interest rate will begin to rise again. If the neutral interest rate begins to rise on the elevated inflation expectation or even just the elevated inflation, what it'll do is eventually meet the Fed funds rate, and the neutral interest rate will have met the Fed funds rate, which is exactly where the Federal Reserve wants to be. However, the neutral interest rate will not rise without the elevated inflation expectation. This is why you're finding so much propagandized information out there pushing this belief. I mean, look at it. Already they're talking about all the exemptions and postponements and postponing and all this other stuff of all the tariffs, right? Now, whether or not that's the case and there is an actual postponement and backing off or not inflicting the tariffs, that's to be said. I mean, I very well believe in the credible threats of there are going to be tariffs going into the future, but I do wonder about the workarounds, the exemptions, the failure to actually have the power of a tariff if they figure out a way to work around it. Okay? That's my question about the whole thing. Yeah, you go ahead and inflict the tariff, you go ahead and put the tariff on things. How is it they're going to figure out how to work around that? All right, 12 minutes into this. I hope people are really enjoying the idea of the credible threat theory and really internalizing it, because right now it is more pronounced in the economy, within the mainstream media than just about ever. But if you're not familiar with the credible threat theory, this is very difficult to see. It is almost impossible. Once you see it, you can't unsee it. All right, Javelin with the $5. I am halfway through Creature of Jekyll Island. Great book. Glad you're reading it. Equally fascinating and infuriating. Yeah, it really is. And helps me understand much more of what you say. Thank you, UE. Yeah, absolutely. Very proud of you to be reading that book. Excellent introduction into the Federal Reserve and the monetary system that we are now facing today. It is an excellent book for that kind of introduction. And I've met Gio Griffin personally, and he is a wonderful dude. All right, Cipher? $2. Thank you so much. Mexico apparently gets a free pass. Yeah, we'll find out, right? I mean, again, it's all credible threat theory to me. So whether or not it's a reality that it happens, I think is less important than the people's expectation and the way that they are conducting themselves today based on the information that they are receiving. Like, they are creating the inflation they are creating an inflationary pressure based off of their expectations. Inflation expectation is a self-fulfilling prophecy. All right. Cipher again with the $5. Jekyll Island is good. Also look at history of central banking. Oh, somebody's trying to call me. I'm going to have to call him back. All right. An enslavement of mankind. Sorry, hold on one second, guys. I got somebody trying to call me, and it's kind of messing my screen up here. All right, here we go. Brody, David, they're threatening to just like the TGA at the start of COVID. That's subjective. Don't worry about it. Hey, Simon, hello from Nashville, Tennessee. Well, hello, John. Thank you very much for the comment. All right. Tariffs mean nothing if there is no product moving across your border. So true. All right, dishes with the smiley face. The U.S. has enough lumber, so a great chance for new companies to start cutting them down in new jobs. He hits like inside trading. Trump is buy low by crashing it and selling high. Dishes, high dishes. Damn AI bots making robocalls. Very well could be. Is this the deglobalization of the economy? No, I don't believe so. I don't think there's going to be deglobalization because we are so reliant on that of the production of the entire globe. Like, even the idea that you're going to bring manufacturing back to the United States, I think is going to be a very difficult thing to do. You're going to find like production of like building material kind of thing. Well, that's easy enough because we can produce that here in the United States and then sell it to ourselves, because pretty much everything within the building industry is a domestically supplied system. Right? There are imported stuff from other nations, but the vast majority of everything that we use to build a house comes right from locally sourced, right? It all comes from the United States. And so to me, like that is the number one produced product here in the United States, right? Is building material in building itself, right? That is the number one manufactured thing. But everything else that we enjoy for our lives, it's like everything else comes from foreign production. And so to me, like, I cannot possibly imagine that deglobalization is going to be anything significant when we enjoy most of our life due to the fact that we are buying production of a foreign nation. Right? Like we're not going to enjoy ourselves to the level we do if we're not buying that of another nation. Right? Like producing it ourselves would be far too expensive. The only reason why we're able to produce building materials cheaper than any other nation is because of the distribution cost of it. Right? Lumber is incredibly heavy, and it's not that expensive when you consider how the amount of bulk that it takes up. Right? So if you don't have a well-established distribution line for it, then it's not like you're going to be sending a whole bunch of material from, another nation over here to the United States when the United States can produce that same material. It's just like you would have to have it so cheap in another nation in order to justify the transportation cost of it. It's just not going to happen. All right, demographics have something to say about global production as it stands now. I'll open with all-nighter. Hi there, classic all-nighter hider. A bot would never make a joke that silly. All right. Why is the cost of housing so high if we have everything to build? Why is the cost so high to build? It's because and this is very difficult to try and wrap your head around, but it's the fact that there was a time in this country in which that the average person could build their own home. So if you can imagine somebody back in 1980 working at a gas station, stopping by the lumberyard on their way home, could piece together a house. How expensive would that house be? How expensive would houses be if everybody could build one? Right? If the average dude working some average job could piece together a house like that, how plentiful would houses be, and how expensive would they be? They would probably be fairly inexpensive, since anybody could pretty much put one together. But houses aren't put together like they were back in the 80s, and there's certainly no way that the average person is going to be able to put one together like that. So understand that's the reason. Same thing with like a car. Imagine back in the 70s or something, somebody in high school over the course of summer pieces a car together. Somebody told me the other day, well, you can still do that. Yeah, but people don't do that. Back in the 70s, people did that. So think about how many cars people could have if they could piece it together themselves. A lot of cars. People would have cars. They wouldn't be that expensive because anybody could really have one. Nowadays, it doesn't work like that. Right? We have to understand this is the inequality. This is the separation between the rich and the poor. The more new money comes in, the harder it is to get into a house, the more money you need to get into one. The less opportunity for the average person to build their own. This is, as time goes on, it's only going to get worse. People say, they're going to look back at this time and they're going to say, man, look how easy it was for the average person to still get into a house. Because in 20 years, it won't be happening at all. Like at all, not like any stretch of the imagination. Yeah? You might find some isolated locations in this nation in which that the average job will be able to do it, but the property ownership is going to be in the absolute upper side of the wealth class. Absolutely. Property ownership and capitalism will separate the rich from the poor in massive form. The farther we go into the future, the more money that gets printed, the more it comes into the system, absolutely the more inequality will take place. And I don't care how you distribute the money. I don't care if you give it all to the poor first. Here you go, here, all the money. You get all the money first, and the poor will spend it on stupid things, and it will go right to the rich. All right? Some won't. Some will be smart. Some will be, will take it and take advantage of the fact that they were given this money so that they could invest and, become property owners or capitalists themselves. But the vast majority of them will go off and blow it on good time. Or car, right? They'll go and buy a car. All right, look at this. We got $2 from Cypher again. Thank you so much for loading me up with these super chats, man. I really appreciate it. I can build a home, but the government says I can't. All right, see, now I agree, right? I agree with this. And again, like the way that homes used to be built, you can't build them like that any longer, All right, number one Savage, thank you so much for being a member for 24 months. See, now if you really want to learn this credible threat theory, you want to become a member of the channel, it's $1 a month, literally $1 a month. I charge very little for the memberships of this channel so that you have access to the member-only live streams where we have broken down Federal Reserve speeches describing the monetary policy in detail, like in the finest of details. And when not only have we broken down those speeches in a way that even the average everyday person will be able to understand, but they're broken down and delivered in a way that nobody else is doing. Literally nobody else on YouTube, nobody on the internet anywhere, not news channels, nowhere is breaking down the credible threat theory and the monetary policy like I have done. And I don't know why, other than its massive psyops operation in order to conduct themselves the way that they are doing. And I believe that to be the case. So again, like I know I'm sitting in a 2001 S10 talking macroeconomics from a working class point of view, but I know that that information that I am been delivering through the member only information through the member only live streams that we have done, that information is by far the best that you're going to find. Like there's nothing else out there that even comes close to it. All right, I can fire my own bricks, but I'm not a contractor. What time is it? All righty, guys. We got a few more minutes here. We'll give it like 7 more minutes. Hi, can you explain how the dollar value rises and falls and what are the most important driving forces these days? So a lot of times we don't really look outside of the United States to understand what is happening with the dollar and the demand for dollars, because when the demand for dollars goes up, the value goes up, right? When the demand for dollars falls, the value of dollar falls. That's pretty easy to understand. It's a supply and demand issue. So if you have a supply of dollars out there and a lot of people look at that and say, oh man, look at all this oversupply of dollars, the value of it is going to fall, money printer go up, prices go, money printer go off, prices go up, right? Dollar value falls. Now this is really simple to understand in this fashion, but what is very difficult to understand is the demand for dollars. See, this is where I think a lot of times people will say, oh, there's no demand for dollars. People hate the dollar. They want out of the dollar. Well, that very well could be true, but do you have a car loan? Do you have a credit card? Do you have credit card payment? Do you have a mortgage? How about outside of your owning of debt or your debt that you owe on? How about you owing a debt of somebody else? Like you own a treasury bond or you've lent money to somebody, okay? These are all demand for dollars that exist off of the debt issuance. So every time somebody says, hey, I promise to pay you back so many dollars, that creates a demand for dollars. Like I could right now to my buddy say, hey man, I owe you $100, put it on a contract, right? Sign it and now create out of thin air a demand for dollars, right? Because now he has a contract that I have signed saying that I owe you $100. So this is where the demand for dollars really starts to come, right? Is through these contracts that people have written that say, hey, I want to be paid back in dollars or I owe in dollars. One way or the other, I have to get dollars in order to facilitate this contract. Those contracts exist in a major way outside of the United States, so much so to the level that there is no real calculation of how much actually exists. So when these contracts all of a sudden start coming due and the demand for dollars starts to rise, and the Federal Reserve is trying to figure out how to meet the world's demand for their liabilities, which is the dollars, how is it that the Federal Reserve provides the world with this liability, with the dollars? How is it that they increase the money supply? So by doing this is how they weaken the dollar, right, in order to provide enough dollars to meet all the demand for contracts that are out there. There could come a time in which those contracts start coming due in such a vast proportion and not being rolled over into new ones that the demand for dollars could exceed anything that the Federal Reserve could even possibly come up with. Like, how the hell do they come up with enough liabilities to provide to the world to meet the world's demand for dollar-denominated debt without driving the United States into an unsustainable debt path by buying up the U.S. treasuries? This is almost an impossibility. And I know this is really confusing for a lot of people to hear, but it's the case. I don't know how many times you have to rewind the video and listen to it, but this is really what's happening out there right now. I have no fear of the failure of the dollar anytime soon. Like, very little fear of that. There is even China, Russia, maybe not Russia, but China, South Africa, Brazil, all these BRICS nations outside of maybe Russia are all writing debts, dollar-denominated debts. Debts that are due in dollars. They don't have anything to do with the United States. These are like their sovereign nations' debts that are due in US dollars. Those BRICS nations are going to demand dollars in order to pay those debts. Or at least the creditors will. Whoever bought these nations' dollar-denominated debt. I don't know how many people look at it that way. They talk about the BRICS nations taking over the dollar, and I'm thinking, nah. Those BRICS nations need to come up with dollars to pay back their debts. Their dollar-denominated debts. Yeah. All right. Let's see here. Wouldn't the Fed go ahead and start purchasing foreign assets in order to alleviate some of the demand for dollars in the shadow banking world? I absolutely agree that they could. Now, they don't. They have, not that I know of in any kind of vast proportion anyway, as far as like quantitative easing with the purchasing of foreign assets. Like, I don't think that to be the case in any kind of major form. Like, I'd imagine there's some of it that's probably happened in the past. But trying to go into like a quantitative easing where you're going to print up billions, if not trillions of dollars and then buy assets of a foreign nation and put it on the balance sheet, to me, that seems very, very dangerous road to step down, because really what you are doing is you are messing around in the international FX markets, which is really left up to the government to deal with. So it's like putting the Fed into a position of power, power over those foreign currency exchanges that they really have been leaving up to the government to deal with. So it would be a whole new way of kind of operations. But from what I understand, they already have the legal authority to do it. So, it's not like they have to ask permission. All right. Actually, a debt restructuring could see the lender take a strategic land asset in exchange for writing off U.S. debt. Insider trading, market manipulation. So the whole world is one nation under the dollar. Pretty much, yeah. Yeah. Like, that's, there are other nations who are using their currencies to do exchange, like even the euro and the Japanese yen, and, they all do international trade. Like, but the amount of international trade that they are doing is just insignificant to what the dollar is doing. Like, the dollar is just like, the dollar's in first place, and then second place is so far away that they can't even really make it out that they exist. All right? That's really the reality of it, is that there is the reason why nothing else is going to compete with the dollar is because no other nation is going to be able to issue out currency in the abundance that the United States has done. The reason why the United States is able to issue out the amount of currency, the abundant currency that it has done, is because of the vast amounts of debt that it has taken on. No other nation wants to go into that much debt. So in order to provide the world with all this currency, it also had to go into a massive amount of debt to provide the world with a safe and liquid asset of U.S. treasuries. So this is really where I think a lot of people get lost when they think about the BRICS nations taking over, is that none of the BRICS nations want to do that. They don't want to be the world's greatest debtor. Maybe they do, but to take on that position, to like say, hey, I'm going to consciously go into debt in a massive way so that I can provide the world with a safe and liquid asset, and then try to protect the shipping channels with my military might and all the other stuff that goes along with it. This is a very difficult thing for these nations to do. Now, from what I can see of the BRICS nations, is that they all want to be producers, savers. They don't want to be debtors. Right? Producing, saving nations build strong economies. Debtor nations that are consuming nations have major issues with inequality and the middle class strength, right? These nations this particular nation is going to suffer immensely because of it. But if you are a producer saver nation, you have a middle class that's growing strong. Now, all those BRICS nations, they all want to be the producer saver. They all would love to go on a gold standard and be the #1 producer. Because if they're the #1 producer on a gold standard, they would export stuff and import gold, depriving the rest of the nations with the ability to have gold, and they would rise to power, very much like the United States did. This is what the BRICS nations want. They're not going to be able to compete. They can't compete with the United States because they cannot go into debt as much as the United States has in order to provide the world with the safe and liquid asset in the currency to do business. You can say it all day long, oh, they'll do it, but it doesn't mean that the world is going to trust them enough to buy up all that asset, all that sovereign debt, right? Not like they have the United States. So to me, it's just like there's nothing even coming close. If you love the material world, you're in for pain. Yeah. Lumber is the past, metal studs are the future. I don't think so, X. All right, gold is absolutely worthless in all reality. Land, on the other hand, can be used to grow crops annually. All right, did Trump put that 14% duty back on as well? See, here's the thing, Brent. All right, here's what's funny about this, is that nobody's really talking about how expensive lumber is today, because lumber really isn't that expensive. In fact, one of the articles I found said something about lumber hitting its COVID peak or something, and I'm like, no, it didn't. It didn't even come close. Like, it's at $650 per thousand. This is the same price that we had experienced back in 2018, right? Lumber is not at its COVID peak. Lumber was at $1,700 per thousand at the COVID peak. It's at $650 per thousand right now. Now, here's something that's very interesting that not a lot of people seem to be discussing, is that over the course of the last 9 months, there's been a 50% increase in the price of, or in the futures price of lumber. A 50% increase in the last nine months. It went from $440 per thousand to $650 per thousand. $440 per thousand to $650 per thousand. Right? Has anybody talked about the massive run up on lumber prices? No. You know why? It's because there's no demand for lumber right now. Nobody cares. So here's this 50% increase in the futures price of lumber over the last 9 months that nobody cares about, and yet everybody seems to be losing their mind over a 25% tariff that has yet to be implemented. You see how confused this whole market is? You see how they're all messed up? It's like I tried to be the voice of reason out here, to try and share my thoughts and ideas of what it is that I am seeing from a boots on the ground working perspective, working class perspective, which is far different from people who are studying numbers, analyzing these things, trying to figure out what it is that has happened when I'm seeing it in real time. Right? And everybody who's working a 9-to-5 job, you are on the forefront. You are witnessing in real time the economy. And I don't know if you realize that. By taking on the understanding of macroeconomics and knowing this, in internalizing this information, you can then use that information that you have internalized through your job and view in real time what is taking place within the economy. You are living in the information, you are living in real time the information that most of these analysis, most of these economists out there, most of these guys are waiting for you to do in order for them to read about it so they can figure out what it is that they need to do. Think about how close you are to the edge of the information. You are on the cutting edge the entire time. But most people can't see it. Like a lot of the guys that I work with, you know, even they were talking about the greedy mills and stuff like that. And I'm like, oh, I don't know. You know, it was just like, go ahead, you can jump in line with all the rest of them too. All right, guys work at a hardware store and he is telling you about economics. Hey, MC, I've stood on stage in front of 850 people who were millionaires paying a top dollar to watch major economists that you would recognize on stage. I stood on the same stage, spoke to the same audience as Ron Paul, Robert Kiyosaki, Mark Moss, Lynn Alden, Lynette Zhang, all these people, right? I don't care that I'm sitting in an S10. I have information that is better than all those people. And I don't mean to brag it up saying that I'm smarter or better than they are. I've just witnessed it from a different way. They're at 30,000 feet looking down on the economy. I'm standing here on the ground looking around, seeing it in real time. If you don't like the information, go find somebody else. You know, you're not going to find anything like this anywhere else. Nowhere. A flies down Leaf Erickson. Hey, Benny, it's great to see you, man. Don't fall for the slick suit trap. It doesn't matter what he is sitting in or what he is wearing, as long as his information is true and based in the fact and research that he does. It matter what he. Yeah, I agree, man. You know, this is the thing. It's all those people that I have ever communicated with at the Rebel Capitalist, Silver Symposium, Mike Zuber's conference, all those people, you know, all the respect that I get from those guys is just incredible. Not one single time did they ask me, hey, what kind of car do you drive? They never asked me that. Of course, they see it in my videos, but they don't care. They literally can care less what kind of car I can drive or I drive. The only people who care about it are people who are shallow and superficial. All right. So I just like it actually says a lot about somebody that I'm communicating with who says something about my car. It was just like, that says more about them than it does about anything else. All right. What else is your net worth? What is my net worth? Okay. Well, I mean, I don't know. Let's see. Considering that I had negative net worth at 40 years old, and what I am sitting on right now is probably, I don't know, just shy of $250,000, I guess. You know? From equity in the house to the stock positions to the Bitcoin to everything that I have. You know, I'm guessing that's probably what I accumulated over the last 8 years. Yeah. Not bad, right? I mean, for somebody who had absolutely no clue of what it is that they were doing at 40 years old, to be able to turn it around in that fashion. How many people you know can do that? All right? You're out there looking for people to give you answers on what it is that you need to do with your life, and here it is. I'm telling you, at 40 years old, I was broke, drunk, had nothing going on in my life, and I was able to turn it around and now have the things that I have in my life. And then people are out there going, dude, you don't know nothing? Okay. You know, go follow somebody else out there then, you know. Maybe stumble along and figure out maybe somebody who's already made $100 million. They did it 20, 30 years ago in a time when that doesn't exist today, and you're going to go listen to them guys. Yeah, I don't care who you listen to. I mean, I'm not here to try and sell you anything, so I don't care, you know. All right, except for my $1 membership to my members-only live stream. That's the only thing I have to sell. That and hoodies. All right, you can go buy a hoodie. All right. Ignore them, Simon. Now, thank you, Angry Capitalist. What time is it? Do I gotta go? Shoot. Yeah, I gotta go, guys. I'm already late. Okay. Uneducated Economist, you guys are awesome. Thank you so much for being here. Thank you so much for following the links. So I always leave links down in the description. It is absolutely imperative that you go and you check out the links for yourself so that you can internalize the information. What I am sharing with you is just my opinion. However, everything that I share with you, in my opinions, always has the links down in the description for you guys to go and check out the information for yourself so you can make your own decisions based on that information. Uneducated Economist, thank you so much for them super chats. Thank you so much for hitting the like button. Thank you so much for being here. You guys let me know.